Hey, this is Julie with J Auto Trading Strategies, and I'm looking at Stochastics Oscillator today to explain why I use it with my crude trading strategies. And that basically is because crude trades like a ping pong ball. It is going up and down, up and down, up and down. And that's the perfect trading pattern for this little indicator. To give you some background on stochastics, the first mathematical formula that you need to understand is that momentum changes direction before price. You have a rate of change of momentum. You have an acceleration and a deceleration. Price is moving up, it's accelerating. But when the momentum starts decreasing, that doesn't mean that price is immediately going to fall, but it means that price is going to get ready to fall. So you get that concept down and you can trade stochastics. However, because it's range bound and you get into a tight trending or a strong trending environment, it's also you have to be paying attention. If it's selling in an overbought condition for a long time, that means that the trend is very, very strong and that you can bank that and start trend trading it. Let me show you some chart examples. First, it is a bounded oscillator, meaning it's the high and low over the past 14 closes. So the high and low of the 14 closes, when it's in this over sold condition, that means that its closes are on its low over the last 14 periods. So if you're in an uptrend, that is where you want to get back in the market, is when it's oversold and price is coming back into the range. Okay? So if it's in a downtrend and it's overbought, you want to get back in the market when it crosses back into the range. So you can use it as the range oscillator. But it has a hidden divergence, which is perfect for timing your trades. Here is the bull and bear divergences that Lane really needs a Nobel Prize for giving us this indicator. And here's the example of when price is making a lower low and your momentum rate of change does not. It makes a higher low. You better close up that short position and or counter trend or get ready for a new impulse trade higher. Lane suggests taking that break above the 50. I like getting in at the KD cross. And here is your bearish divergence example when price in the market is making higher highs, but the rate of change is coming down, down, down. You know that long position needs to be closed up because the price momentum is coming down, so that there's likely to be a trend change. So I would recommend that you take a look at the stockcharts.com website and familiarize yourself with this oscillator because it is wonderful and it really works well with crude. Here are some examples from my chart. I've got an 11 range chart just to show you an example of how well that the momentum captures the price move. And you can see that the momentum is turning here, but price keeps going up. But where do you want to sell? I like taking these entries. I can take this short and fade it with a lot of confidence is when I've got a red band showing my rate of change is turning, but I've still got green candles going up. But here is a third deviation band on my VWAP. I mean, what better perfect place to take a short, right? So I will take a short. I'll fade that touch to the third deviation band. This one didn't quite get there, but you know, in trading, close is close enough. So another way to get in, if you miss it, if you miss that kiss, is to wait and just be looking at your oscillator bottom and wait for this crossover. If you took the first cross, you might have got in a little bit too early, but take the second cross down and that's a surefire winner. And look how much that would have made you in crude yesterday, $1.41. So I use the stochastics many different ways, especially when I've got that rate of change divergence going. I can tell with my color background, I've got my green candles on a red band, and I'm going to be looking for that area that price is going to be coming up to touch before turning direction. Or you can be more safe and wait for it to cross the 50 line, or you can do the 80 cross. Several ways to trade this. And the divergences work very well. I'll show you several examples of divergences on my 3-range chart. So if you want to take a smaller time frame to narrow in on these trades, I recommend that. But you can see that when price is making a lower low, but the momentum is making a higher low, you know that this pullback has ended. So it's like, how do I trade pullbacks? How do I know when to get in? I get trapped here. Well, wait for the divergence. Okay? And when you see the divergence, you know that the pullback has ended and you can get back in the direction of your trend at that very moment. Okay? Right here, when price crosses D. My KD cross. That's like a money maker. So I get back in with the direction of the trend, and where do I know to take my price off? I've got my momentum change, my K crossed under D, and even though price continues to move up a little bit after my first signal, here's my second divergence. I've got a lower low on the momentum, but I've got a higher high on price. Am I going to follow price? No, absolutely not. I'm going to follow momentum. And sure enough, it flushes back down. So this is a great way to trade. I like the Heikin-Ashi bars because they also help me understand when the direction of the bar is really changing. And between the Heikin-Ashi and the stochastics, and with my levels on my initial balance or my VWAP or volume profile point of control or value area high or low, I've had a complete trading strategy. And that's what I'm going to be offering my templates for through Bloodhound to get you as much opportunity for these signals that I am seeing also. And allow you to take advantage of when to time your entries using stochastics in the market with crude. Thank you so much.